What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw a continuation of the bounce off of that very strong support trend line. Do we need to pull back from here or can we possibly continue to go higher? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today on SPY we were up 0.27% and we continue to see a bounce off that strong support trend line. And we did close back above all the moving averages with the price action. So it definitely looks like the bulls are back in full control with the very strong bullish price action. There's going to be a lot of reasons to believe that we could see a breakout in the very near future. Now we do have a very strong push for 3 days in a row, so I wouldn't be surprised to see a little bit of a cool down, which means we could see a little bit of a pullback or possibly start to form a bull flag from here before we can go any higher. Remember, the bulls take the stairs up and the bears take the elevator down. And right now, if the bulls are taking control, we're looking for the stairs up. So strong support levels to pay attention to is going to be right around 470. And there is a ton of support at that level. There's very many reasons why that's going to be a very strong support level. So by far, I would pay the closest attention to 470. Now your next support to pay attention to if we do break down below 470 will be the 50 EMA, which is just above 465. And keep in mind, it is a positive slope, so it will continue to increase and rise each and every day. So those are your two strongest support levels for the bull scenario. And if we start breaking back down below about 462, you're looking for a retest of the trend line right around 458. And below that, the full gap close at 455. Remember, below 455, we're looking for that full-blown correction, so watch that very critical support level. Now, to the upside, we do have the resistance trend line at 472, and you can tell we did fail to break and close above that level today. So the bulls need to close back above 472, and we should regain the full bull trend on the SPY chart, which means we will be back in the full bull trend on the daily chart, and this will be a market that could push back to new all-time highs. So SPY will be looking very bullish back above 472, and you're looking for a retest of 478 and a breakout above 478, a brand new all-time high price target at 483. So like I told you many times, this is still a macro level bull market, so there's no reason not to believe that we can continue to push higher until we lose this very critical support and start to close below it. Jumping over to the NASDAQ 100 triple Qs, you can see we're up 0.4% today, and the NASDAQ 100 is looking a lot weaker than SPY. The price action is failing to break back above the 50 EMA, and we're still below 3 of the 4 moving averages. So this is mostly due to the tech sector being sold off in favor of other sectors like financials. So right now you can see the tech sector is trying to claw its way back higher. The triple Qs will need to close back above 390 and then break back above 392, and then we will have price action back above all the moving averages. Now keep in mind, we still did bounce off the trend line just the same as SPY, so the price action is still looking bullish above the trend line, and that critical support level is down here right around 374 to 375. So in the event the triple Qs start to pull back, you're looking for strong support at 387 and 383, and if we start breaking back down below 379, you're looking for a retest of 375 to 374. Below 374, you're looking for the full-blown correction, which means we're coming down to close the gap at 360. Look for the bullish breakouts above 390 and 392, which means we could retest 400 and 402. And above 402, we're looking for brand new all-time highs at 410 and 415. On the Dow Jones, we were up 0.11% today. And remember, the Dow Jones never did lose the bull trend. And we did bounce off of the retest of the breakout as support right around 360. So the Dow Jones is looking very bullish, and we can clearly see the Dow Jones wants to go higher from here. So look for a retest of resistance at 365 and 368, and on a break above 368, a brand new all-time high at 372, with the most critical downside support levels at 361 and 360, and below that, the very strong support level will be 358. In the Russell 2000, we were down 0.74% today, and we continue to see the Russell 2000 looking very weak, regaining the full bear trend and price action still below all the moving averages. So from here, don't rule out the possibility that we could break down below 214 and come down for another leg lower at 207 and 205 on a breakdown below 212. To get more bullish, we need to see price action breaking out back above about 224, and then we could retest the gap close area right around 228 to 229. There's no way you should be getting bullish on the small caps until they can get back above at least 231 and then break out back above 234. Below 230s, we're still in a downtrend, which means you want to expect lower prices. And it's very similar to ARKK, where you never know exactly how low it can go. So don't try to catch a falling knife. Wait for the bullish price action confirmation, which means we need to break out back above 231. And yes, there is a ton of resistance until we can do that. On the ARKK ETF, we were down 2.78% today, and we can see ARKK is going back down to the support level right around $85, and we did close just below it. so don't rule out the possibility that we're coming back to retest 81. Below 81, we're more than likely going down to $70, so you won't want to hold this long on a break below $81. However, if you're taking long trades, this could be the bottom for all we know, so this could be great risk-reward ratios, but we won't know ARKK is getting bullish until we break out back above $91 and start closing back up here above 99. So there's a lot of room to the upside before we know ARKK is going bullish. So respect the fact that ARKK is in a bear market in a very strong downtrend and can continue to go lower into the 70s if we do see a breakdown below $81. On the VIX, we were down just over 4.2% today, so we continue to see the VIX getting crushed, now closing down below 18, which does mean the VIX is more than likely trending down towards 16 and then 15. So remember, as the VIX heads lower, that's more bullish for the stock market, which means we could continue to see a bull market that could send us to new all-time highs. Get a lot more defensive on the VIX levels above 20 and look for the full-blown correction if the VIX breaks out above 24. On Bitcoin, we're currently up over 2.6% and we see Bitcoin back above the 5 EMA for the second day in a row. Remember, this was a strong support level right around 40,600 and so far we are bouncing off that level, but we can't forget that we are in a bear trend, so just because we're bouncing doesn't mean we're getting bullish. This is a strong downtrend, which means we're looking for another lower high, which means we need to see Bitcoin getting rejected at 46,000 to go to that next leg lower down here at 38,000, or at least retest the previous support right around 40,600. If Bitcoin starts breaking back out above 46,000, that will be a bullish breakout, and then getting back over the 50 EMA, which is right around 48,000, will be the next bullish breakout. Once Bitcoin gets back above 51 to 53,000, it'll be looking a lot more bullish. But until then, don't forget, it's more than likely going into a bear market and could be going all the way back down to $30,000. So don't be getting overly bullish until we can see bullish price action breakouts. On NVDA stock, we were up 0.65% today, and we did get rejected at that strong resistance level at the 50 EMA, which is at 285. Remember, on NVIDIA, below 271, we're looking for a breakdown all the way back to 253, and below 253, we're looking for the gap close at 233, which would happen very quickly. The bullish breakouts will be back above 285 and then starting to close back above about 292. And then if we do get that breakout back above 296, we could see another bull cycle to retest the previous all-time high up there in the 330s. So look for the bullish breakout back above 292 or the bearish breakdown back down below 271. On Tesla stock, we were up 3.93% today, and we did see Tesla getting the bullish breakout, which isn't that surprising because we never lost the bull trend. Remember, we bounced off that strong support level at $1,000, and I told you to look for a retest at 1080. On a breakout above 1080, we're looking for the potential to run all the way back up to 1208, and if we can break out above the next resistance at 1240, we could see new all-time highs with a price target of about 1400. Now, if at any point we start breaking back down below 1030, get a lot more cautious because the next time we break below the 50 EMA, we will lose the bull trend, and we will more than likely lose that support level at 1000 and come down to close the gap at 940. On Apple stock, we were up 0.26% today, and Apple stock failed to close back above that critical level at 176. So for all we know, this is just a bounce before Apple has more downside. We'll know Apple is looking bullish if it can break out back above 176 and start closing above that level and reclaiming it as support. And in that event, we'll be looking for Apple to break out above 180, regain the bull trend, and potentially try to get up there to my price target at 188. Now, if at any point Apple starts heading back lower, you're looking for a retest of the support level right around 170. And if we break down below 168, you're looking for a full-blown correction, which means Apple stock is coming back down to the low 160s or mid 150s. So you can only get bullish on Apple stock if it can break out back above 176 and stay above that level. Otherwise, you're looking for a retest of 168 and a bearish breakdown below that level to send us back into a full-blown correction. On the financial sector, we were flat on the day, only going up 0.07%, but overall we still have bullish price action and we definitely have the very strong bull trend. The industrial sector was up 0.32% today, and we still have the bullish price action and we still have the bullish trend. The healthcare sector was down 0.29% today, and we are back above the 50 EMA for the third day in a row, so there's still the possibility we're coming up here to close this gap. The energy sector was up 0.19% today, and we still see very bullish price action with a very strong bull trend. So jumping back over the S&P 500, you can clearly see that we do have strong sectors across the board, and we're starting to see a very impulsive bullish bounce off that strong support. So don't rule out the possibility that we're still going back to new all-time highs because we are still in a macro level bull market. We have strong earnings reports coming right around the corner, which could be a catalyst for higher prices. And then after we see earnings, if we see any misses, that could be a catalyst for a full-blown correction. So the next couple of weeks, there's not a lot going on, which might mean the bulls take over control and we start to see that low volume melt up. and then look for a lot of high volume events coming near the end of the month. So this could be a great opportunity to trade off support and get ready for higher prices. And so far, we're starting to see a lot of bullish developments. And don't forget, you are still in a macro level bull market, and we're in a bull market until we're not. We need to see a definitive price action breakdown below critical support, because that's the only objective way to know we're losing the bull trend and the only objective way to know we're going through a full-blown correction. There's no room for guessing in this game. You need to have a strict plan and stick to it. Have good risk management, have discipline, and have patience, and execute your trade plan accordingly. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that sends all of your buy and sell alerts directly via email and text message and only trades the ETF TQQQ. Bank Trade Alerts is currently up over 13.3% in the last 3 months, and we're absolutely crushing this market. With all this recent volatility in a brand new trading year 2022, now is the best time to become a bank member. You can find out all of the information about Bank Trade Alerts and how to subscribe by clicking on the link in the description below. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis to help you navigate this market and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.